Good afternoon. Today is Monday, June 21st, 2010, and this is Brian Shannon from alphatrends.net. Let's take a look at the S&P 500 here. We had a big range day, and it did close lower here today. So we had the market fall short of the 50-day moving average. But when we look at the daily time frame, the other level that we've been looking at as potential resistance was pretty much tagged almost exactly, and that is the 50% retracement of the high from April down to the low that we saw in the middle of last month. So right now we've retraced almost exactly 50% of this range, and that's where we found some sellers today. Now, what I had said on the blog earlier in the morning was that we would be looking for about the 112.30. Hopefully be finding some support, and the next level below that would be the 111 area. 111 has been an important area here for the last several weeks. Actually, you could even say last several months, as it had been support back in here in May that turned into resistance late May, early June, and we finally broke above that. We tested it a couple times last week, and we came back down and tested it once again today. And today, I really didn't want to see the market come down and test that 111 area again, in particular because we got below the, well, here are those two levels on the 10-minute time frame, but we were below this 5-day moving average. And now what we have to look at is this market is potentially just undergoing distribution for a turn lower to get back into alignment with the 50-day moving average, which is now declining. So in other words, what I think we have to be really careful for is maybe some strength tomorrow. That if it fails to get above probably 112.50, if it fails to get above there and then breaks down below the volume weighted average price tomorrow, then I think we probably have good opportunities to get short for a trade down towards the 109 level, and that would just be an initial target. We'd have to see how the market holds down in that area, but right now there's a lot of indecision in this market. We've seen the big gap higher today and covered a very large range. Almost the entire session was spent below that daily volume weighted average price, and when it is below the declining volume weighted average price, we just generally don't want to be buyers of the market. So we continue to be getting a lot of mixed messages from different time frames. On the bigger picture, the weekly time frame, this is still a possibility that we're looking at is the neckline of a head and shoulders pattern that seems to maybe be forming that right shoulder. If we can't get above this level here in the next couple weeks, then we run the risk of a breakdown. That's still several weeks out, though. It's just a scenario to potentially be aware of. The other possibility is that we could still be in this type of movement here and run out to new highs. I think that becomes less likely, though. But again, the market is always a moving target, and right now, in the near term, this 111 area is really going to be important. If we get below and hold below that for probably 20 or 30 minutes, then I think you want to become much more defensive and be looking for a move down towards about the 109 level.